20% of American adults consume cannabis, but if you apply for life insurance today, there is a very high probability that an outdated underwriting algorithm will treat you exactly like a pack-a-day cigarette smoker. This diagram compares two identical life insurance policies for the same healthy individual. On the left is a standard smoker rate, on the right, a non-smoker rate. Over a 20-year term, that single classification difference costs between $50,000 and $80,000 in total premiums. Apply directly to a highly marketed insurance carrier, and any trace of THC use automatically drops you into that massive penalty box on the left. The natural instinct is to simply leave your cannabis use off the application entirely to avoid the markup. But standard life insurance policies require a medical exam with blood and urine tests. THC is detectable in urine for up to 30 days after use, especially for regular consumers. If your exam tests positive after you've denied using it, the carrier will immediately decline your application. More importantly, they log that discrepancy in the Medical Information Bureau, a permanent record that will complicate every single life insurance application you submit from that day forward. Even if the test misses it, life insurance policies have a 2-year contestability period. If you die within those first 2 years and the carrier discovers you concealed your use, they have the legal right to deny the claim, leaving your family with zero financial protection. Your life insurance application is strictly protected by HIPAA. Your usage cannot be shared with law enforcement. Full disclosure is mandatory. The actual financial strategy is finding the specific insurance carrier whose algorithm views your exact method of consumption favorably. The life insurance industry is highly fragmented when it comes to cannabis. There is no industry-wide rule that dictates who gets a smoker penalty. That decision is governed entirely by the individual underwriting algorithm of the specific insurance company you apply to. This creates a strict trade-off between convenience and cost. If you take the convenient route and click the first online ad, you are playing roulette with algorithms. You might land on a carrier that treats an occasional weekend gummy exactly the same as a daily tobacco habit. Securing a fair rate means switching your consumption method to a carrier that has updated its guidelines to reflect actual risk. This scorecard shows the 3 main consumption categories underwriters evaluate. We will start with edibles and tinctures at the top. Because these methods involve zero combustion and zero respiratory exposure, progressive carriers view them highly favorably. As a result, users who strictly consume edibles or tinctures have access to the cheapest Preferred Plus non-smoker rates across a wide variety of marijuana-friendly carriers. The catch here is frequency. To lock in that absolute lowest rate tier, your use generally needs to be occasional, typically capped at 1 to 2 times per month. If you use CBD products, the rules are much simpler. As long as there is no THC involved, CBD use is treated as a non-smoker trait by virtually all carriers, regardless of how often you use it or how it's delivered. Ultimately, if you avoid inhaling your cannabis and keep your frequency moderate, you have a direct path to the industry's lowest available rates. The calculations change significantly once we move down the chart to inhalation methods, starting with traditional smoking. Underwriters closely associate combusted marijuana with the lung health risks of tobacco smoking. Because of this, the absolute best rate you can hope for is a standard non-smoker classification, and only a narrow selection of carriers will offer it. Even at those carriers, the frequency thresholds are incredibly strict. Only very occasional traditional smokers qualify for standard rates before being bumped into the penalty tiers. Which brings us to the biggest friction point in the life insurance market today, the vaping category. Vaping removes combustion and the heavy respiratory byproducts of traditional smoking, yet most major insurance carriers lazily categorize it as identical to smoking. This blind spot in the industry forces modern consumers, who specifically switched to vaping, to pay the exact same premium penalties as a heavy tobacco user. Securing a non-smoker rate for vaping requires routing your application to rare, boutique carriers that have actually updated their internal medical guidelines to reflect the lower risk. Right now, vapers are the most penalized demographic in the underwriting process. Applying directly to a standard carrier is a guaranteed drain on your wallet. Faced with these strict rules, many cannabis consumers consider skipping the medical exam entirely out of anxiety over THC testing. They look towards simplified or guaranteed issue policies. These require you to answer a few health questions, but they never draw blood or urine. The financial trade-offs for skipping the exam are steep. These policies strictly cap your total coverage amount, and they charge a significantly higher premium for every dollar of death benefit you buy. When you calculate the long-term ROI, a fully underwritten policy with a non-smoker rating is almost always mathematically superior to a no-exam policy. Paying a premium to avoid the medical exam out of fear will yield a worse financial outcome than simply disclosing your usage and letting an expert route your application correctly. Apply directly to a mainstream carrier and you risk a misclassification penalty that doubles your cost. But an independent broker gives you immediate access to over 100 carrier algorithms to find the exact one built for your specific profile. Diversified Insurance Brokers has a specific marketplace advantage: established relationships with the rare carriers that actively grant non-smoker rates for vaping. A specialized broker reviews your exact consumption method and frequency before any paperwork is filed, ensuring your application is sent only to the underwriter most likely to approve it at the lowest rate.
It requires a brief consultation up front, but that single conversation secures the correct rate class for decades. Do not let an outdated algorithm dictate the cost of your family's financial protection. Leverage a specialized broker who knows the exact rules of the modern insurance market and secure the rate your health actually earns.